As the U.S. markets are closed for Wednesday, November 5th, 2025, we look at the last market close for Datavault AI, ticker symbol DVLT. At the bell yesterday, November 4th, the stock closed at $1.78.5 per share. This was a drop of about 2.99% on the day, though it's worth noting that in after-hours trading, it clawed back some of those losses, ticking up to around $1.83. Now, the immediate expectation for a stock like this, one that has AI right in its name, is that you're looking at the next high flyer, a smaller version of NVIDIA stock, perhaps. The narrative is that this is a company on the cutting edge of Web 3.0 and artificial intelligence, but the reality of what just happened is far more complex and, frankly, more chaotic. Just days after being targeted by a scathing short seller report from Wolfpack Research, which the company has publicly refuted as false, Datavault AI just spent yesterday announcing a flurry of new, seemingly disconnected ventures: an exclusive license for a biotech platform, and a separate partnership to build a blockchain music platform. This isn't a simple growth story, it's a high-stakes battle for control of the narrative, and the stock is caught right in the middle. Most people looking at DVLT on their Robinhood app or through their SoFi Invest account see a stock that has been on an absolute roller coaster. The 52-week range tells you everything you need to know: a low of 25 cents and a high of $4.10. This is the kind of stock that fuels conversations about online investing and the potential for massive gains, but also massive losses. The common belief is that you just need to catch the right press release, the right wave of momentum, and ride it. The company has certainly fed this belief, with announcements over the past months about a major resource commitment from IBM and a new partnership to launch a Swiss digital asset exchange. This all sounds fantastic, painting a picture of a company with global reach and serious institutional validation. But that's where the expectation and the reality diverge sharply. The deeper take is that this is a company in a full-blown crisis mode, fighting a war on two fronts. On one side, you have the short sellers at Wolfpack Research, who have publicly bet against the stock, implying its value is overinflated. On the other side, you have a retail investor base, and the company is making moves that seem designed specifically to appeal to them. Case in point, the recent and highly unusual announcement of a one-time distribution of a Dream Bowl 2026 meme coin to its shareholders. This is not a move you'd expect from a company in the portfolio of Schwab Intelligent Portfolios or a conservative Fidelity Wealth Management. This is a direct, almost defiant nod to the culture of self-investing that has become so powerful. It's a move that screams, "We are not a traditional company, for better or worse." Let's focus on the recent movement, because that's where the real story is. The stock has fallen by over 50% in the last week alone. This wasn't a gradual slide, it was a cliff dive, a direct reaction to the short report that hit around October 31st. The trading volume has been immense, with 33 million shares changing hands yesterday and average volumes recently sitting closer to 80 million. This isn't a forgotten microcap, this is a battleground. Then, just yesterday, with the short report allegations hanging in the air, the company terminated a previously announced agreement to acquire API Media Innovations. This could be seen as a responsible move, conserving cash. But on the very same day, it announced a new worldwide exclusive license granted to Scilex Holding and a separate partnership for NFHITS for blockchain music. This rapid-fire, almost frantic pace of deals makes it incredibly difficult for an investor to get a stable picture of the company. Are these legitimate, high-growth opportunities, or are they attempts to distract the market from the short sellers' allegations? This is the central question. For someone using a sophisticated Fidelity trading platform or the systems at Interactive Brokers, the challenge isn't just charting the technicals, it's decoding the corporate strategy in real time. This kind of volatility is precisely why many investors opt for the stability of Fidelity ETFs or Fidelity mutual funds, rather than picking individual stocks. The risk profile here is in a different universe from, say, Apple stock or even the more speculative Tesla stock. So what does Datavault AI actually do? Buried under the recent drama is a business model that, on paper, is fascinating. The company, based in Oregon, describes itself as a leader in the visualization, valuation, and monetization of assets in the Web 3.0 environment. Think of it as building the tools to value and trade digital assets powered by AI. This is a hot space. The IBM commitment, which involved a multi-million-dollar equivalent in resources, and the move to launch a Swiss exchange are its cornerstone proof points of legitimacy. They've also talked about blockchain-enabled prescription drug tracking and digital credentialing for the aerospace industry. The portfolio of ideas is broad, which can be a sign of innovation or a sign of a company throwing everything at the wall to see what sticks. This is where an individual brokerage account holder at Fidelity or SoFi needs to do their homework, looking beyond the headlines. This brings us to the future outlook. The expectation, pushed by the company, is that these new deals and the IBM partnership will form the foundation for explosive growth. The counter-expectation from the short sellers is that this is a house of cards. The reality is that this stock is now a binary bet on the company's credibility. The risks are profound. If the short report gains more traction, or if these new partnerships fail to produce tangible results, that 25-cent low could easily be revisited. The company's negative earnings per share are constant pressure. The meme coin strategy could also backfire, alienating any serious institutional investment interest that was considering the stock. On the other hand, the potential catalysts are just as powerful. If the Scilex or NFHITS deals are real and generate revenue, or if the IBM collaboration leads to a scalable product, the short sellers will be forced to cover, and the stock could move violently upward. This is a classic high-risk, high-reward setup, perfect for the SoFi active investing platform or for traders using Robinhood stock trading tools. Comment below with your thoughts. Is this dream bold meme coin a brilliant move to engage shareholders, or is it a massive red flag? Let me know. In closing, the story of Datavault AI is a perfect example of expectation versus reality. The expectation is a clean, high-growth AI and Web 3.0 company. The reality is a messy, incredibly volatile, and complex situation. We have a company fighting a public short seller, terminating one acquisition while starting two new ventures on the same day, and using unconventional tools like meme coin distributions to manage its investor base. This isn't just a technology story. It's a story about a battle for narrative control. And for investors, it's a reminder that not all investing sites or platforms like the Fidelity mobile app can protect you from this level of extreme volatility. The path forward for DVLT depends entirely on whether its barrage of new deals is the foundation for a real business or just a defense mechanism.